What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 28, Wednesday, May 17th, 2023. We made some trades today, so let's get into it. So coming into today, my goal for this session was to just be able to be patient enough to wait for my best setups and only take those. I think where I went wrong yesterday is that I took a couple of trades that were just completely outside of my trading plan, and I took unnecessary losses because of that. So I wanted to come back today and just clean up everything and do things the right way. So let's start our analysis at 9:30 this morning when the market opened. So we initially had a sell-off, and then we pulled back, created a lower high. At that point, we did establish a higher low. Now this is one of my favorite setups to trade. So I look for a downtrend reversal and then a higher low to get established, and I look to go long as prices come back into the support level made from the higher low. But there are scenarios where this pattern does fail. So there are successful versions of it, and then there's the failure versions. Now the failure version occurs when prices either push back through support and close below it and stay below it for more than one candle, or if prices just completely spike away from that level and never even have a pullback. So those are the two ways that the downtrend reversal with a higher low that gets established can be an actual failure. So in this scenario, that's exactly what we saw, because look at how we initially came up, made a lower high right here, and then on the next candle, well, maybe two candles later, we created another lower high. And also notice how all of these touches and lower highs are actually corresponding with touches on the channel line. So that helps us out and shows us that the trend is down. We always want to respect the bear trend line, always. So once prices actually push through a higher low support level, that invalidates the higher low reversal, right? But what it does is it sets you up for the next leg of the downtrend, because more than likely when prices do pull back in the downtrend, they'll probably pull back to retest this previous low that was established once we created that higher low. They'll pull back up there and use that area that used to be support. Now they'll use that area as resistance. So that's the idea I had going into trade one. So let's read our trade notes. So I shorted on the touch of the bear trend line, and I need to hold my best trades. Now I say that because if you look at trade number one, everything literally lined up perfectly the way that it should have. So we were in a downtrend, we were respecting the channel line. I waited for a pullback up to the channel line that also intersected with the same level as the higher low support. So what used to be support but is now resistance. So that is a great example of how when you have two, I guess, positive signals on a trade, it makes your trade more likely to succeed, mostly because it's more groups of people that's participating in that move. So it's people that's going short based off of prices coming back to retest what used to be support but is now acting as resistance. And it's also people going short because they see the trend line get in touch and they see it get poked through, so they're trying to take the sell side and be able to take prices at least back down to the bottom of the zone or even further. But needless to say, there's definitely more groups of people in the market selling at that time, so it gives you a higher probability of that short trade being successful. So with trade number one, I just need to learn how to accept the risk behind my best trades. And that's something that I've been working on for these past 2 or 3 weeks, because I think I try too hard to have a winning day. And as soon as I take a loss, I'm just like, oh, something is wrong. Something's not going right. And in order to avoid those losses, I cut some of my trades way too early. But what I need to start realizing is that you gotta be willing to take that loss on that trade. My stop loss is 13 to 14 points. So I gotta, when I get into a trade, I gotta be willing to visualize what 13 to 14 points against me looks like and be able to accept the fact that that's a possibility. Now, of course, I think the trade is gonna be successful, but if I don't accept the risk that comes behind it, then it's gonna make me a little bit too jumpy when I'm in the trade. The trade might go against me for 1 or 2 points, and then I close it out and see it eventually end up going my way without ever hitting my stop loss. So I think it really comes down to, I think, better practice sessions, because in my practice sessions I trade these types of setups here and there, but I think that I need to trade it a little bit more just to build that confidence up, so that when I do take it in real life, I can just hold it. No matter if I feel nervous or skeptical, or maybe I feel like I might get stopped out, if I believed in the trade enough to place it, I gotta believe in the trade long enough to hold it and see it actually come to fruition. So that's what I learned right there on trade one. So after we see that move happen, and it did eventually come back down to the bottom of the zone like I was forecasting. So we had a bear spike. We had a 1, 2, 3, 4, 5, a 6 candle bear spike to the downside, which is where we established our consolidation zone. So I just drew this zone based on the bottom of this swing low, which also lined up with the close for this candle next with the open for this candle next to it. I took the close from the green candle and then just extended that throughout the market parallel. So after we establish our consolidation zone, we actually see another higher low get established. So this is another representation of my favorite setup, the downtrend reversal with a higher low that gets established. The same thing that we were looking for up here is actually what we ended up seeing down here also. So we have that higher low get established, and I like to go long when I see prices come back to respect the support level made from that higher low. So in this scenario, I didn't have to extend the line across like I did up here. Instead, I just used the support level from the zone because it was right there. So it made sense. So once I see prices pull back up, they did come back and retouch that trend line. So for anybody that was still looking to go short, you could have made a very nice profit off of that because the trend line is being respected. So then once we see prices come back down into support, I went long at 2. Now at 2, I had ideas about taking the trade all the way back up to this next level of resistance a little bit higher up, or at least to the channel line. But when I saw prices spike up and then come back a little bit, I just got a little skeptical and I got out. So I cut that trade really quick. But then I hopped right back into the same trade at 3 once I saw that prices really weren't breaking past the support level. Because what was scaring me right here was the fact that the channel line had been respected for so long, and the fact that the first time we came back to the level of support and tried to break out, we couldn't do it, and we really just respected the channel line once more. So that scared me a little bit, but I still got back in because when I see my setup, I have to take it. And it's been so many occasions where I see it and I don't take it, and it does work. And I've learned over time that not every variation of this setup is going to be just completely appealing where it makes you want to go long and it makes it clearly obvious that you should be buying. Sometimes it's going to take a little bit of action and back and forth in the market before the setup actually comes to fruition, but that level of support should be a good entry point for me if I'm able to be patient and of course hold on to my trade. So that's what I was thinking about at trade 3. Now I also had the same idea as far as profit targets. I wanted to hold it to this next level of resistance up here, but my logic on this trade was if 2 came up to the top of the zone and then came back, why should I expect for trade 3 to break up past the top of the zone if the previous break didn't do the same thing either? So more than likely when I trade a zone, I'm like, look, if it's been in a range, it has a tendency to continue to stay in the range until there's just a drastic price movement. So if we didn't have drastic price movements on 2, I don't expect it on 3. So that's the reason I got out at the top of the zone. I think I made a good decision right there because it did end up coming back to the bottom of the zone where my break even stop would have been hit. But what actually happened after that was the actual move that I was looking for. So it's one of those scenarios where you took what you could get, but it was more to be had that was in my wheelhouse. Like this wasn't a setup that I was unfamiliar with. This was just another setup where I go long based on the higher low support level. So even though I did get it at 3, I did have another opportunity to catch it that next time. So not saying that I should have caught it, but it's just some food for thought just to remind me that there is plenty of opportunity in the market all the time. And that's another example right there. So once we come back up and retest this level of resistance, notice how this level actually lines up with what used to be a swing low. So we have our swing high from later in the market come back to that same level. And that's a principle of price action that's very common in the market when you're trending. If you're in a downtrend, more than likely you'll see prices come back up, retest what used to be a previous low, and then they should find resistance right there if the downtrend is strong, create a lower high after that, and then continue. So that's exactly what we saw in this situation right here. We saw prices come back, retest what used to be a swing low, and then we had a lower high get created right here at the ellipse. And from that point forward, we had 1, 2, 3, 4, 5, 6, a 7 candle spike to the bear, 7 candle bear spike to the downside. So that bear spike actually just brought us back into the zone at trade number 4. Now at trade number 4, I went long because yesterday I literally had this exact same setup. So let's go back to Tuesday really quick. Which one? Let's see. I'm looking for trade 4. Okay. So yesterday I saw this exact same setup kind of between trades 10 and 11. So notice how we had a downtrend reversal that had a higher low that got established based off of a zone, and then the next level up created a higher low. Notice how we moved all the way back up to the level of resistance that was established from the previous swing low, just like we did today, and then we pull all the way back into the zone. Now where I went wrong yesterday was that I thought that the down movement from the top of this resistance level was so strong that it was just going to push all the way back down through the zone and let the downtrend continue that had already been established a little bit earlier in the session on this particular day. But what I was ignoring was the fact that this higher low setup is so powerful, and I think that's why it's one of my favorite setups. But sometimes it's so powerful that I underestimate it. Like, man, there's no way it's gonna be enough buyers to step in right here and stop all of this selling that occurred from 220 all the way back down to 150 in the span of 7 minutes. But lo and behold, that higher low did hold up, and I actually went short yesterday instead of going long, which, as you can see, I took losses because of that. I took 1, 2, 3 of them actually. So coming back into today, when I had that same scenario happen where it was a strong sell-off after a higher low got established, and that sell-off brought prices back into the zone, on today, I said, look, I know exactly what to do. Support level is more than likely going to be respected, so I should go long. And that's exactly what I did at trade 4. I went long right here. But I think where I went wrong was for the same reason I went wrong on trades 1, because I'm just not holding my best trades. And if we read my trade notes, it says the same thing. Hold your best trades. I went long at the bottom of the zone. That's one of my textbook setups. Looking to go long at the bottom of the zone. Not only that, but also looking to go long based off the level of support drawn from the higher low. So I have 2 different strategies that I use combining within one specific setup. So I have to take it and I have to hold it. I think that's where I went wrong. It's a great entry, great identification by me. I'm trading in line with the trend. That's fantastic. That's good. But it really means nothing if I don't hold the trade and get the maximum reward out of it. So that's really my biggest focus right now. Taking my winning trades and maximizing the profit potential on them, because I believe that I should have been taking profit at the top of the zone. There's no reason why I shouldn't have, but I got scared and shaken out of the trade and I didn't hold it long enough as I needed to. So when I came back to trade 5 was just, I would probably say the only trade today that just was a bad trade and didn't really fall in line with my trading plan. Now you would say, oh, well, it came back to the bottom of the zone again, so you should go long. Well, I would say no, because if you took the entry the first time and that trade worked for you, you don't really want to take that entry the second time. And I say that because think about how you would be as a trader if you had a good trade right here at trade 4. You caught it at the bottom of the zone, you was able to take it back to the top, and you took your profits. Now in the span of a 1-minute candle after this candle formed, would you really jump right back into that trade, or would you wait on it just to see what the market is going to do? Because you're saying, okay, well, if this was a lower high, I caught the bounce, I don't know if the bounce is going to have continuation to the upside, so let me wait. That's what I should have been thinking at trade 5, because there won't be as many people taking that long trade because a lot of people already took it and they're happy, they're content. So even though the buying is not going to completely dry up, there just won't be as many participants on the long side as it was the first time. So your probabilities of success, they're not completely eliminated, but they do decrease because it's just not as many people on your side this time. So I think that's where I went wrong at 5. And I kind of had an idea about that when I was taking the trade, because it was something in my head that said, should I really catch a falling knife, or should I wait for it to potentially break back down through the zone, and then if they come back up through the zone, then I catch it? That's what I should have done, and that's kind of what I did, like halfway. That's what I did on trade 6, but the fact that I took the loss on trade 5 kind of ate into the profits that I made from the good idea from trade 6. So I think that's one of the detriments of taking bad trades that don't align with your trading plan. More than likely, they'll probably lead to losses and probably eat into some of the gains that you'll make on the trades that you're actually supposed to take. So that's what I learned right there from trade 5. Just be a little bit more patient. You don't have to catch every single move. So when prices actually did spike back up through the zone at trade number 6, that's where I went long, took it back up to the top of the zone, and that right there is a textbook trade for me. I did everything right on that one. Proper identification, proper management while the trade was open, and a great exit at a great price, exactly where I should be getting out at, not a tick further or a tick lower. So I think I did a good job on that one. Now, after trade 6, we see a higher low get formed inside of the zone that leads prices all the way back up to retest this level of support. Well, excuse me, this level of resistance that we established earlier, that used to be a level of support earlier in the market when we first got open. So after we come back up to this level, we consolidated for a good amount of time. Now, within this entire consolidation area, I was basically just looking to go long and expecting a continuation of the uptrend, because that's how I like to trade a range that gets established. So the first thing I like to do is determine which way were prices moving before the consolidation was established. So in this scenario, we were moving up. We had higher highs and higher lows off of a major level of support coming out from the bottom of the zone. So the trend is up, which tells me that I only want to look to go long, preferably from the bottom of the zone and as close as I can get to the lowest levels of the zone, because of course I want to buy low and then sell high. So that was my idea going into this entire series of trades between 7 and 11. So let's read my notes. So I attempted to go long based on the higher low right here, and then I took one small loss. So I took a small loss right here. I bought too high. I took 3 break-even trades. So I bought here, prices moved up in my favor, came back, hit my break-even stop. That was the first one. I went long right here, a little bit lower. Prices came back up to the top of the zone. I should have took profits right here, I'm not gonna lie, but I thought that prices would, at least in this occasion, continue back up to the top of the zone. But it makes sense when prices kind of found resistance right here, because if we look to the left, that's exactly where this wick kind of lined up. So it makes sense, it's logical. So I ended up taking a break-even loss on that one. And then my third break-even loss was on this trade right here. I went long towards the bottom of the support level, expecting prices to actually move up to the top of the zone, but I was a little bit too early and my break-even stop got hit. And then I finally caught it on my last trade as prices finally started to break out of that consolidation zone to eventually start the next consolidation zone. So that brings us to trade 12. So basically trade 7 and 11 were 2 of the same setups back to back. We had a up move that was followed by a higher low that led to a consolidation that eventually led to a breakout. Then once we had that breakout, we established another higher low that led to the next consolidation that eventually led to this breakout at trade number 12. So I would say on trade number 12, I traded this setup a lot better because I was really just going through it when I was trading this 7 through 11 period, because I had a good idea about what the market was going to do, but it was taking so long to come to fruition that it made me start to question whether or not my idea was correct. Because, you know, time is a very important factor when it comes to the market. When you have certain setups, you want to see them start to work in a certain amount of time, or you start to become very skeptical, like, hey, if everybody hasn't stepped in and went long right now, then what's the problem and what's the holdup? And then you start thinking like maybe something is going wrong. So I think that was the reason I took a lot of these break-even trades, because I moved my stop up myself. So it was scenarios where I was like, you know, I could leave my stop at my normal level and just let the trade run. And I think that probably would have actually been the best idea in this scenario, because if I went long right here and went long right here, if my stop was 13 points down below, I would have never got hit on either one of those entries, not the first or the second. So I think I really just could have went long, held my trade, and just stuck it out, and I would have ended up with the same results, just with little to no break-even losses. Because those break even losses, even though you don't make anything or lose anything, it's a break even trade, but you still got to pay commissions. And commissions, I think on my platform, they come out to be the same price as 1 point. So for every trade, you give up 1 point worth of commission. So this 1, 2, 3 break even trades actually cost me 3 points when you add it all up. So those little break even trades, even though they're only worth 1 point, they add up over time. So you want to make sure that you try not to take break even trades if you don't have to. So that's what I learned from 7 through 11, and I quickly adapted when we came and created the exact same thing afterwards at the next higher low. So I had opportunities to just, go long prematurely, but I waited and I was patient, and then I finally waited for prices to come back after they made a false breakout. Now this little small wick right here, this candle, I know it probably looks insignificant, right? But at one point in time, this was a completely green candle that came back up to the top of the range. And that pretty much was the buyers showing you what they wanted to do, because if we look at the price action, we come into this level, establish the higher low, we push up, create, I wouldn't call it a higher low, but we respect the level of support multiple times on multiple occasions, and then we finally have a breakout, but it just isn't successful. But that's the buyer showing you what their intentions are. They're trying to push the market higher after they've already done so before. So once I saw that false breakout happen, I put my order to go long at the bottom of the support level, and I expected for the breakout to happen, because usually when you have a wick like that where the buyers show you what they want to do, it'll probably be that move happening maybe within the next, sometimes it'll be like within the next 1 to 2 minutes, but sometimes it'll be at least maybe 5 to 10 minutes later. But within the near future, that move is probably going to come to fruition. So that's what I was expecting at trade 12. And I went long at here. I went long at the bottom of support and just took it back up to the top of the zone, because at this point in time, I wasn't really quite sure if we were going to start trending and break out to the upside, because we had been in a very tight kind of low volume, a lot of noise consolidation for a good minute. This started at 10:30 and then it lasted until about 11:15. So for 45 minutes, we were pretty much just sitting there going back and forth. So in my mind, I was saying, if it's a slow market, let me take smaller profit targets, take it back to the top of the zone, and then get out. I thought about holding it, but I passed on that opportunity. And even though we see prices shoot up to the upside with a huge spike after this, I just feel as though I made the right decision, because based on what I saw and all the information that I had up until that time period when the breakout happened, based on all that information, I think I did the best that I could do, because how was I supposed to know that prices could break above the zone? Now, I don't think that that's something that I shouldn't know. I think that's something that I can study and learn about, and learn like, okay, what would be the difference between this green candle here that led to a test of the top of the zone, and what's the difference between this wick right here that led to a false breakout above the zone in comparison to this candle right here that led to the successful breakout. So I want to kind of study the difference between what's the similarities or characteristics that distinguish a breakout from just a false breakout. Basically, at the end of the day, that's what I want to figure out. So I think this right here, trade 12, represents me doing the right thing, but also represents growth in the market, because if I study and I'm able to figure out why it broke out here and didn't break out before, then that'll help me out in the future and allow me to expand on this top of the zone, well, bottom of the zone to top of the zone long trade that I like to take. So I think that's an opportunity for growth right there that I definitely want to look at pursuing going forward into the future. So that right there was my last trade for the day. I was able to close out with a little bit of profit today, and I'm happy about that, because 2 years ago on a day like today, I would have got eaten up, because I wouldn't have been patient. I would have been taking impulsive trades that didn't line up with my trading plan. Now I did that one time today at trade 5, but out of 12 trades, to have 11 out of those 12 be trades that all aligned up with my trading plan, I'm very proud of that. So that's something I can definitely pat myself on the back for. But I think what I need to do is, like I talked about earlier, just hold my best trades, because even though today was a decent day, it could have been a lot better, and it didn't have to take any more effort to be a lot better. All I had to do was just capitalize on the trades that I already took and make the best out of those opportunities. So trades 1 and 4 really just stick out to me because it's just so many points that I'm leaving on the table, and I believe that I'm perfectly capable of catching those trades. It's just about not only having a plan, but executing that plan flawlessly on every single last trade. From the first trade you take to the last one that you take, they all need to follow your trading plan. So I think that's what I need to work on, man. Look, it's 3 steps to every trade: entry, trade management, and then trade exit. My entries and trade management are on point, but I need to get better at that trade exit because I don't want to keep leaving all of these points on the table. So that's going to be my main focus going into my back testing session. I want to just focus on taking my best setups and actually having great exits on all of my trades no matter what. So that's my main focus tonight. Today was day 28. I appreciate you guys for sticking with me to the end of the video. I hope you were able to learn something today. I'll be back tomorrow on Thursday, May 18th for day number 29. And I'll be here at 9:30 a.m. sharp. You already know. But until then, good people, I'll take it easy.